You have done a lot of work in terms of the effectiveness of commodities in providing inflation protection. What are your key findings? Would it apply in stagflation scenarios?
It's understandable, it's almost intuitive that commodities provide good protection to inflation. When you think about what inflation is the move up or down in underlying real assets. And the biggest components of inflation are energy prices and food prices. And so they're commodities. And so the work we've done shows that commodities have a very high correlation to inflation and can provide a bit of a hedge to inflation, particularly unexpected inflation in the market. In periods of stagflation, there's still value in holding commodities because you have some tail risk protection there, and you've got some protection, again, if we see a quick and immediate change in inflation expectations.
Is inflation the only reason for investing in this asset class?
Absolutely not. I think inflation has always been used as one of the reasons to invest in commodities. And the other historical reason to invest in commodities is because of their diversification benefits in a multi-asset portfolio. But more and more we're seeing investors actually think about commodity investing in a different view. They're talking about using commodities as building blocks to express very tactical ideas. So for example, if they have a very strong view on the oil market, they might just take an investment in oil. They might take an investment in gold if they're interested in a tail risk type of product. The other area where we're seeing commodities become really popular is in the risk premia or the factor investing space. Commodities are very well suited to these type of systematic trading strategies.
How much commodities should an investor have in their portfolio?
I think it really depends what the investor wants that commodity exposure to do. Do they want inflation protection? Are they looking for some diversification? Are they looking for some protection from a tail risk perspective? So they want to have a little bit of gold in their portfolio? Or are they actually looking to trade commodities in their portfolio tactically? The important thing to remember is that commodity prices don't actually go up always over time, unlike equity markets. So the timing of your commodity investment can be important, but also the size of the investment can be important. We would say that for an investor looking at a broad multi-asset type portfolio, that they should think about having a couple of % of their portfolio in commodities, but then potentially also look to use, say, individual commodities at certain times to express different themes. So they might be interested in taking a position that reflects their view of crude oil, or a position that reflects their view of the Chinese market and using iron ore or metals to express that. So it really depends how and when they want to use commodities in their portfolio.